This is the Playbook Checkup. Today we're going to go over an opening drive consolidation above VWAP trade. That actually sounds like a trade with the trend. Again, we are actually having another standing ovation. I think this is actually 2 in a row where we actually have a trade being presented that is not a fade trade. So this is a special event over here at SMBU. So what we do here is we bring forward one of the guys from our desk, one of our newer traders who's trying to get good. They archive at the end of each day a playbook setup that makes the most sense to them, and they do it in assembly template form, which you are starting to look at on our shared screen. And then what we do is I will ask questions, eliciting responses from the trader, hoping to point out what they did well, hoping to help them think through their trades potentially in a more constructive way, and certainly answer any of your questions. So if you have any questions, put them into the chat and we will stop and get to them. Okay, fair enough. And on that note, on this beautiful Tuesday, we will start, as we always do, with the big picture, and we're going to bring in Chris.
All right, thanks, Bella. Okay, so as we have noticed in the last few weeks or so, the SPYs have been pretty much trading in a range between 188 and 184. There's a lot of indecision in the marketplace, and we haven't had the real sell-off that everyone's expecting, but we have had is this rotation into more defensive names, especially ones with high dividends. We saw this in the example such as Microsoft a few weeks ago, and this one sounded eerily similar. So just to give you some intraday fundamentals on Kellogg, which we're going over right now, it hasn't really participated in the most recent rally, and there's the $63 level has been a pretty significant resistance level, and these next 2 stats down here are really how we actually found this stock. It has a high dividend yield, 3%, and a really low PE. The average on the S&P right now is around 15 times. So this was the type of candidate that we were looking for, at least had on our radar for the defensive name with the high dividend.
So let me just stop you there. So I love the way you're putting together this trade. So you have a thesis, and well, it's not even a thesis, right? It's an observation that you're from the marketplace, which is there is rotation. There's a big money rotation into these more defensive names, and then certainly out of some of the high beta stocks, and you're finding one that is underperforming. But you're not just going to go ahead and buy it. You're going, because I don't think you just did that, but you're also going to look for a price to confirm your thesis, which is, hey, this needs to sort of catch up like all the others, and if it gets above important technical levels, that will be my confirmation. And that's a really great way to put a trade together.
Okay. So right here is really where we found this, and then so you could tell the R-vol for something like Kellogg to have 4 times R-vol, it was definitely significant. So on the daily here, this level right here, you can see this 63.50 or 63 area has been pretty much technical resistance, or just an important level. And also, just to let you, this
just
is
to can we go back to that last screen, because
yep.
I'm curious about. So when you say you were looking for certain dividend yields?
Yeah, something with a high dividend yield. It was the scan that we did.
And okay, tell me about the scan. That sounds great.
So FinViz scan, search for. We had a FinViz scan searched for stocks with a low PE and high dividend yield, and then just kind of ripped through all the charts. And this one just looked like it was, prime for a breakout.
And how many stocks came up from your scan?
Probably 20, 25.
Okay, great. Let's move forward.
Okay, so just to note on the last slide how this really hasn't participated in the rally. I mean, this is a year chart, and it's pretty much flat for that whole year. I mean, we were up like 130% last year, so this has definitely been a lagger. And then, so here's the trade, just on a high level on the 5-minute. We had a strong opening drive above this 63 level, which we showed, and then this 63.50, we were just kind of consolidating above that level and VWAP, and then it just kind of took off. So this is a little bit more detailed view here. So this is a 3-minute. We had that strong opening drive, and then VWAP and these kind of converge into this one price right here, and then that's kind of the catalyst, I guess, for it to go up. Once it does make this consolidation above the previous high, that's kind of confirmation for us that, hey, this probably is going to work. And then, so
are you tier 1 at this consolidation level and tier 2 above that consolidation area?
So actually, I did do tier 1 right here because I was afraid I was going to miss it. I was afraid it was going to be a Microsoft where it just.
And what price is that?
That's 50 cents, 51 cents.
So it's holding above the longer-term resistance level.
Yeah, pretty cleanly. And one thing I actually didn't notice, point out, which I will just go back real quick, is this 66 up here has kind of been a resistance, and you can see it kind of stopped there as well. So we can go back here. So I marked that right here as 66 resistance. And then, so really this is how the trade went. So bought at 63.50, stopped below 30 cents. And again, I just kind of bought here because I didn't want to miss this. It just looked like a Microsoft could have just kept running and never looked back. Although you probably could have gotten a little bit better prices down here, and it definitely was not the most exciting trade to sit around and watch for. I think this was 10:30 and it didn't break until 1:30, but it didn't really have any really crazy fluctuations. You just kind of set your stop. It didn't even come close to it. But although in this area I did start to think, hey, I might be wrong because it was getting really tight and starting to really test that VWAP and previous level. Now in hindsight, I guess this might have been an area where you could have improved your price. And then, like we mentioned before, this is kind of confirmation that the trade's going to work. And then here you could have added and got more size. Here I closed a lot of it because the ATR on this is about $1.50, and they'd come all the way from 63 to 65, so I didn't know how much really juice was left, so I took a lot off here, and then once it got up into the 66 resistance, I was completely out. Although I did leave a little bit on the table. I did make one last little leg after.
Okay, and so did you look at how much some of the other defensive names moved to help give you a target other than 66 for how much this would go up?
No, I didn't look at. Definitely something I could have looked at, but I didn't. It was really like a deer would have been something I kind of was looking at also, but it didn't actually have this nice move. But no, I wasn't looking at the other defensive names at this time.
Okay. All right. What else?
Just in my trade review, I said I like this pattern, especially in a name like Kellogg, where I could have been a little bit more hands-off. I kind of set my stop and never really paid attention to it. Well, it just didn't even come close to it. And I was really surprised how much it moved intraday, so I was a little quick to take profits. I probably could have kept a little piece for a large move, but already had almost a point in the trade. So
now, was there anything in the news that made the stock move on this day, or was this a purely technical money flow, money rotation trade?
Yeah, I was looking for news on it, and there wasn't. It was just that it was the exactly money flow, just sort of the rotation into defensive names. The volume, as you could see, didn't, maybe not on this slide, but the volume didn't really come in until the end of the day. So this is probably where that RVOL actually got increased.
And that's the way that stocks traditionally used to move. Big institutions traditionally would come in that 3 to 4 o'clock hour. That's why we always say if something starts to trend in the 3 o'clock hour, you really don't want to try and fade it generally. All right, good. And so, just to summarize, good job of coming up with a thesis, good observation of the market overall, noticing the rotation, the money rotation in the marketplace. Good job of using technology by putting together a scan that helps you find ideas to exploit this money rotation thesis. Excellent job of combining price confirmation with your overall thesis. And good job of being prepared for how much you think it can kind of go up by looking at a longer term technical level like 66 and its ATR to try and figure out how you're going to manage the trade. So look, this is a very nice job here. Let's make more trades like this. If we do that, Chris is not going to be coming back too often for these reviews, and he's going to get himself kicked out of a lot of other mentoring sessions that the young guns go to over here. But on that note, trade well. We'll see you guys soon. Thanks a lot.
Hi, I'm Mike Bellafiore, author of The Playbook and One Good Trade, co-founder of SMBU and SMB Capital here in New York City. If you want to learn more about SMB, please go check out smbu.com. Check out our blog where we share tons of trading tips, trading stories, trades we're in, trading anecdotes, and also take the time to sign up for our 10-day free training program, which we offer to the trading community at smbu.com. We hope you enjoy it. We hope to see you on the site. Trade well.